If you are a real estate agent or property practitioner, one thing you can't afford to ignore is your trust account obligations. I'm talking to property practitioners today. Hi everyone, my name is Molen Mkuzi of Brainmore Chartered Accountants. Welcome back to Brainmore Business Hub channel, your accountability partner in business compliance and business growth. Today we want to break down everything you must know to stay compliant with the Property Practitioners Regulation Authority, your PPRA, and to avoid losing your Fidelity Fund certificate. So let's just get into it. So relax as we learn together. So number one, I want us to understand why trust account matters. As an estate agent, you are holding people's money, like their deposits, rentals, and levies. So you need to understand that that's not your money. It must be protected in a separate trust account. You are holding that money as a steward in trust on behalf of someone. The PPRA, formerly the EAB, requires all property practitioners who handle clients' money to open and manage a trust account at a registered South African bank in South Africa. What is the purpose for that, someone might ask? Is to protect the buyers, the sellers, the landlords, and to ensure no mismanagement or misappropriation of funds, and to give clients peace of mind when transacting through your agents. So failure to manage trust money correctly can actually lead to criminal charges or even losing your license. The penalties that are there now are hefty. So number two, the legal and regulatory requirements. Here is what's legally required under the Property Practitioner Act. Number one, separate trust account must be clearly titled as a trust account and cannot be used for agency operational expenses. You can't pay your rent or your people there out of that trust account. Number two, you need to do monthly reconciliations. You must reconcile the trust account every single month. What do I mean? If there is 10,000, whose money is sitting in there? That 10,000 is for who? Which landlord? So reconciliation must be available for audit and the PPRA review. Number three, annual independent audit. You need to appoint a registered auditor like Brainmore Chartered Accountants to submit an audit report to PPRA on your behalf. You don't submit yourself. The auditor submits on your behalf. So the audit deadline is usually within 6 months after your financial year end. I think for the year end for December, it's June, December, January, February, March, April, right? So it's 6 months. It's now 6 months. So number four, the interest, which is very critical, the interest on trust funds. All interest earned on trust money belongs to the Fidelity Fund unless the client agrees otherwise, right? So it's very, very important to know if the trust account, bank account, and interest by law belongs to the Fidelity Fund. You need to have a valid Fidelity Fund certificate. You can't trade without a valid FFC certificate. Your FFC application requires proof of your trust account and your annual audit. So here are some of the common mistakes that we have picked up in most agents agents make. Some common red flags that agents overlook: using trust funds to cover short-term cash flow, delaying trust account reconciliation, and mixing trust funds with business account money. Actually also appointing an auditor too late or not at all. Failing to submit audits to PPRA on time. Remember, the PPRA has access to your bank records. If trust funds are misused, consequences can actually include disqualification or legal persecution. Imagine you no longer trade at all. Very, very important. So as Brandmore, we can actually help, and we are helping a lot of PPRA practitioners to stay compliant. We help them, the real estate firms and property practitioners, with monthly trust account reconciliation, setting up their accounting softwares to separate trust and business funds. We actually prepare and submit the audit reports on time for them, those that we are not doing the accounting for, because we are not allowed to do both. Helping with your FFC application as well and the renewals. We also even offer training for your finance and admin staff on proper record keeping. So our goal as a firm is to keep your practice clean, compliant and credible in the market. So you need to be able to follow best practices as an agent. So for example, you need to keep your trust accounts in top shape, right? Reconcile monthly, not just before year end when the accounts need to be audited. Keep a proper trust ledger for every client or for every transaction. This needs to have his reconciliation. Train your staff on trust fund handling protocols. Use a system like QuickBooks, but there are actually systems as well that are tailor-made for estate agents. You need to engage proactive auditors, not just a sign-off partner, auditors that are going to help you pinpoint things that you need to. So in other words, the critical part here is treat trust money like it's not yours, because it's not, right? Treat it, it's not yours, it's not yours. So just to conclude and wrap up this session or this video, trust accounts are a legal obligation. They must be separate, reconciled and audited. Non-compliance can cost your FFC or even your entire practice. If you are not sure whether you are doing it right, let's talk. You can contact us on our help at Brandmore. We can have a one-on-one chat and try to help you so that you can simplify your compliance and strengthen your operation. Subscribe to this Business Hub channel for more industry-focused content that keeps you compliant and in control. Until next time, manage your trust account properly, build your reputation, and grow your business. Never at all should you pay penalties, or never at all should you find yourself disqualified because of non-compliance. Until then, see you, subscribe, share, and even comment. Are you on track with your trust accounts? Thank you.